This is Danielle. Welcome to the close. Can you see me and hear my screens? Thank you. Thank you. How's everyone doing on this Friday afternoon? Oh, yeah. Thank you very much for joining my webinar last night, everybody. I'm hard at work on my slides, finishing up with the final pieces based off of additional questions that I had. I always like to, whenever I get additional emails and stuff, I always like to add more at the end based off of things that come up. So I want to start off by taking some requests. What is it that you would like me to discuss today? I definitely have a list of stocks that I want to discuss as well. Is everyone sick of SpaceX yet? Caterpillar, INTC. Let's start with Iron. Sure, yeah, we can start with Iron. Um, so this is actually one that I was just looking at as I was working on my slides. And that was how I found so many different ideas this morning. But this is definitely a fundamental shift. So I have basically like I have 10 sections of the class, but one of the sections I'm discussing, how to identify tickers that have a fundamental shift and how to get in on the ground floor, basically. And a lot of it just has to do with earnings. And as you can see on this grid here, something very critical changed right here in this moment. Um, and ever since that time, it has been volatile for sure. But now at this moment, I feel like it's great for another entry because you can see how last quarter going into earnings, it was down on the low, and then all of a sudden buying, high volume buying comes down to the 50. And then do you see how it just rocks going into the final push going into earnings? And that right there, I mean, that's buying volume. You can see the blue dots on the candles. Whenever you have high volume buying coming in right before an earnings report, that is people that, they think they know something. They're like, "Oh, this earnings report is gonna be great. I gotta get in. I need to own these shares at $56." And you can also see those people were right because it gapped up 12% after the report. Now, it did pull back. It wasn't a breakaway gap, but, with this pullback into the 100 simple and the bounce right there, again, another buy opportunity, and now we're just getting another chance. So I have been buying shares in this company for a while. I did add more long-term stock buys this morning on this one. I also added some options, buying some options out into July. So basically the way that I do it is if you're looking at an options trade, you need to have a shorter term price target because, you're not planning on sitting through all kinds of wiggles forever. Um so for the options trade, my price targets are really up here at this previous high, like 66.70. But it just depends on the behavior, what happens when it gets there. Sometimes you hit up that previous high and you fail. That's where I would just take the money and run. But if you do not fail and you break through it on high volume, then that's where you look for the next target, which is going to be up at 76. So I'm trading that one right now. I posted the alerts in the Simpler Trading Mastering the Trade room like an hour or two ago. You can see that it is, faltering a little bit around this zone, but I think it's fine. You have the daily squeeze. You have a really nice pattern. If anything, I just should have bought it yesterday. Yesterday would have been a much better buy spot. I remember we were talking about it yesterday and looking at the chart, and I just didn't buy it yesterday. So I'm buying it today. Now, if you look at the weekly chart pattern, you can see that this is pulled back into the 50 simple on the weekly chart and bounced. And you have just consistent buying ever since that point. You have increasing volume. You have volume up above the zero line. You have a squeeze that has momentum that's continually shifting higher. And I don't know what the short float is on this one currently, but let me just see. 17%, my friends. So we are, we're pretty close to short squeeze territory. If you can get up into the $70 price point, at that point you should be able to jump up there and tap this 76.87. We'll see. Um we should have another earnings report coming. Looks like maybe the beginning of August. That doesn't look right all the way at the end of August. So I would suspect that this one should make a run in the summer, just because of when the earnings report is going to fall. If you're using the earnings hot zone, you're not going to see the next earnings date unless you add more time. But specifically in this case, um, it's just a question mark because there's no estimated date here, and there's nothing we can do about that because that's a think or swim thing. So, but if you look at the last date on May 7th, you just kind of estimate and project it out. It's going to be sometime during the summer, right? So, anyways, I like this one. I think it looks great. AI infrastructure is looking pretty hot. APLD is another one. I do own shares in this one, and I bought it down in here when it had the weekly squeeze because that's when I buy my long-term shares of stock. I buy them when they have weekly squeezes. Um, so that one, already came up and made a new high, but it actually is still in the weekly squeeze. You can see how the weekly squeeze is still consolidating. You have these white dots and you have these red dots, and we have more white dots. And then if you look at the daily chart, it's not, I wouldn't say it's a great place to buy the long-term stock just because the weekly squeeze has already sent it so much higher. But at the same time, it's still only $43 a share. And now it has another squeeze. We have a daily squeeze right here. We have a shift in momentum. It's bounced right off of the 50 simple and it's onwards and upwards, looking like it's going to trade up into 55 and then 60. So I didn't take an entry on this one yet. Um, but I like this one a lot. I think it makes sense to buy long calls on it. Like I said, I already own the stock. If you want to buy some long calls, a time that is generally going to be what I think is the best is going to be the run into earnings time frame. Now, again, this one is what I would consider a fundamental shift. So, for those of you who went to my webinar on the earnings hot zone, which is this earnings tool right here, I have a ranking system that ranks the charts based off of how strong they are for a pre-earnings momentum rally. Now, you'll notice on this one, it's getting a 2 out of a 5-star rank. So you might say, well, why would you pick that one? Didn't you tell us that you want 4 and 5 stars? Like, yes, in a perfect situation, the 4 and 5-star ones are the ones that I'm just going to do every quarter. It's like, it has a 5-star, I'm going for it. Taiwan Zimi has a 4-star, 5-star. This one actually is 5-star right now. I'm gonna go for it. It's entering the hot zone. Like, let's go. Let's give it a whirl. The 5-star does not mean it's going to work 100% of the time. That is not what it means. The 5-star means that it has a very strong historical pattern and it fits all of the criteria. There can definitely be quarters where I remember, like, for example, like the trade war with China, and there was a bunch of, oh, what's going to happen with Taiwan, and like it just gets hammered for that one reason. Like, you can see back here, there was this quarter, back in here where it got hammered. Like, it doesn't work 100% of the time. The idea is it works the majority of the time, and if you look at this chart, it's its own back tester. So you can see, okay, it worked this quarter, it worked this quarter, it did not work this quarter, it did not work this quarter, but it worked this quarter, it worked this quarter, it worked this quarter, it worked this quarter, and we don't know about this quarter, but we can give it a try because 6 out of 8 times it has worked. Does that make sense? So, like, each chart is basically its own back tester. And what the 4 and 5 star means is that those are the ones that I'm gonna give it a shot. The APLD and IRIN are what I would consider um, a fundamental shift. So, what that means is that it does not have that long historical history where it just works quarter over quarter. You can see if you go back 2 years, it did not work. It's like red, green, green, red, green, red, green, red. Like, it was not, the pre earnings momentum rally was not working during this time frame here. But then what happened was there was a change. There was a change at this moment in time. The stock gapped up 25%, then it gapped up 26%, then it gapped up 7%. And last quarter, admittedly, it gapped down. However, that quarter it posted a positive EPS number. Um, and what was really interesting about that is, do you see how buyers just came in on high volume and it just ripped higher? So, um, the tickers that do not have the 4 and 5 star, those are gonna be the ones that are just not, they don't have that 2-year history of a strong historical pattern. Um, but what they do have is a situation where they're now becoming hot. They're now becoming interesting. People are paying attention to them. They're lower price names. They are going to be more volatile, but for me personally, it's like, hey, it's worth a shot. I think it's worth a try. So you're not entering that earnings hot zone just yet, but it does have a squeeze. It does have earnings coming up. The earnings report's at the end of the month sometime. So, I mean, I think it's worth a shot. The question is just, do you want to buy it now or do you want to wait another week or two? I think either is fine. Let's see. It looks like this one maybe. When you don't have the exact earnings series this far out, you just kind of have to take a little estimate here. Thank you. But you're gonna have a problem with some of these names where they just don't really have enough, just doesn't really have like enough volume in the options market. So you're just gonna have to look at, okay, would I like to trade this out into July or would I like to go out into August? So I feel like this one is a pretty solid ticker with that daily squeeze. I personally already have IRIN, I already have NVIS. I don't know that I want to add this one also, but I think it's a good setup and I wanted to bring it up to you. The Delta 70s are, you could probably get them for about $8, which is pretty good. Then if you go out into, it looks like they don't actually have an August series. So you'd have to go into September. So if we go to September, that would give you even more time and there's plenty of volume there. So you would just have to go out into this series right here. I would say probably, I mean, Delta 40 has plenty of volume there. You get it for about $11. So, I mean, I like all of that. I think that it makes sense. If we look at IRIN, like I said, I already added this one this morning, but it's a pretty similar situation where, you can see the overall squeeze pattern. You can see the pullback buy. And then if you just layer in that additional factor of, what's one more reason that I could use to buy it? Um, what you have is you have an earnings trend. So last quarter, you had a big gap up, 12.3%. Quarter before that, you can see that there is, a very slight gap up, a point 0.4. That's not super notable. Um, but when you're looking at all of this, it's kind of like, okay, do you see where this major change happened? Um, we have this major change right here. So we got a 19% gap up after, and this is the most notable part. Do you see how it had a massive rally going into the report and then it had a 19% gap up and then on top of the 19% gap up, it just ripped? That's what I would call just a major fundamental shift. So, I would give this one a go. Well, I did give this one a go. I already posted the alert on this one. Um, and then yeah, like I said, you can always add more time um to your grid so that you can see if you can see where the next earnings report is. This far out, you're it's probably not going to be super accurate, but it does just give you kind of a visual of, when are you getting closer to that next earnings report. So for this reason, this one's just a regular it's just like a regular squeeze trade. So and now that I'm thinking about it, I actually don't think I got filled on my NBIS trade. Okay, so NBIS, I did get filled on this. I was purchasing long-term shares, so I got filled on that. Not in this account, in the account that I'm building for Leo. Now he's saying that he wants to go to medical school. I'm like, oh man, I better start using a more aggressive strategy in this account. So that's that's not gonna be cheap. Um, all in on SpaceX. Can someone hit the buy program for SPX? So for NBIS, I think this one has a great daily squeeze. Looks really, really good. We have an overall price target of 300 and then 327. So if we go down to the lower time frame charts and just see if there's anything else going on here. Um, what I was looking at was a trade into 300. So I was looking for a $300 butterfly. Um, using this daily squeeze, NBIS has been added to the Nasdaq, or at least it was announced last night. Let's see, when is it actually going to be added? Is the next question. Going to be added. Monday, the 22nd. Yeah, so anytime you see anything being added to like the, Nasdaq 100, that's pretty exciting. That definitely can cause some buying pressure. Just like I came across a CrowdStrike yesterday, which I think has a split coming up. So, pre-earnings momentum rallies are like a news related buy the rumor, sell the news kind of trade. Same thing with a rally going into a split. It's typically it's a common trading setup to use a news related event to buy the excitement. Obviously, you want to be the person that's like buying the excitement here, not buying it up here. Which is we're going to look at SpaceX here in a minute. But buying the rally into a split, buying the rally into going into a being added to the Nasdaq 100, like that's definitely something that we could use as a catalyst. And then with NBIS, you also have the situation where this ticker is going to be entering into the pre-earnings time frame and most likely will be rallying going into earnings. So, for those of you guys who are in the trading room, I mean, you know that we've been focusing on this stock going into earnings like pretty frequently. Like I said, it's nothing is 100%. The quarter before last, it actually got a little hammered going into earnings. In the quarter before that, it got a little hammered going into earnings as well. But what the stats do is they give you an average over time. And if you look at the average over time, this quarter, this quarter, this quarter, this quarter, it completely rocked going into earnings. So, um, it's just one of those things where you're looking at the averages over time, you're looking at the patterns, you're looking at the trends. Just because it did it in the past, it doesn't mean it will for sure do it in the future. But it does mean that if it did it in the past enough times to enough of an extreme, it's to me worth taking a shot at it. So with this one right here, the earnings hot zone average is 16.5% during this pre-earnings time frame. So you have a combination of the Nasdaq 100 inclusion, you have also high short float, then you're gonna get into the pre-earnings time frame. Like there's a lot of different reasons to buy it. So that's why I bought the long-term stock. Um, as far as an options trade, I was working on that. Let me go back and look at that. Spot gamma anyone, and then yeah, we'll look at the SPX trade. I just don't see anything with the SPX trade, guys. It's just there's nothing happening here. You want to try an iron fly, then be my guest. But give me another 6 minutes to see if I see any kind of market movement. But a day like today is not the day where I would choose anything. I just wouldn't choose anything directionally because there's no direction here. You have ticks between there's just no buying, there's no selling. Let's see. Put call ratio is low again, 0.63 after it was elevated and extended. VIX is down at 18 again. It's just I don't see a directional bias at all. So unless something changes drastically in the next 15 minutes, which it could, I don't personally see a directional bias. Okay. Now for this one, you can certainly just do a put credit spread, 235. Let's see here. So, you could do one for next week just for the rally going into the Nasdaq 100 inclusion. And this one's almost 1-to-1. You have enough volume. You could also do it $10 wide. I think that's fine as well. And Bruce was doing a butterfly in NBIS. He did July 17th, 270, 310, 350 for $4.25. I mean, I like that one. So I think this one's looking pretty good. $2.50 right there. Just simple selling and put credit spread. It's a little short dated to be honest, to come in and kinda sell a put credit spread like that. But I think overall the idea makes sense, looks good. My issue with trying to go further out was just that there wasn't a lot of volume. Let me see if it looks a little better now. So when you're trying to sell a put credit spread and enough there's just not enough volume and open interest, it just gets really difficult to sell it because you see the spread right here, 2175 by 2485, 1935 by 2220. And then if you look at the spread down here, the spread is $2 by 425. That's just not gonna work because it's gonna make it really difficult for you to get in and really difficult for you to get out. So, that is not gonna work out, to go out farther. So, if you wanna do a put credit spread, next week will make sense. I personally don't really like doing put credit spreads 35 days out. It just takes forever for the move to come through. Um, but I do like the idea of trading it into 300 with a butterfly going into July. So at that point, you could do it like $50 wide. Let's just see what it looks like. $7.23. It is out of the money. So, you have a out of the money situation where if the stock falls back farther, especially because of the news today, it might take might take a little while to get it until it's up above that 250 strike. But at the same time, the expected move into July is $69. So you only need a $15 move before that 250 would be in the money. So I like all those ideas. Looks like looks like they're giving a little bit back today, which is fine. I mean, if I could buy it, tomorrow or Monday for a better price, like that's even better. Buy it at 220. I would be fine with that. And it looks like since it's falling right now, I think I'm just gonna wait on it. SPCX. So much talk about this. I don't know who is sick of it yet, but in general, I am not gonna buy, like, a large position on anything the day of the IPO. I did buy 1 share in Leo's account just because I thought it would be cool to say, in 15 years, like, "I bought this the day of the IPO. Look at that. Here's your 1 share." Um, so, it's not like I was throwing a ton of money at it or anything. I definitely do wanna own it. I definitely wanna have more of it. I'm not gonna do it today. I know Daryl bought some. Daryl's been telling me about SpaceX for probably forever. Um, long, long, long time ago, he was on the SpaceX bandwagon. So, well, I guess it wasn't a bandwagon because it was before it was cool. Yeah, he's been telling me about it since like the first date. He actually tried to convince me to buy a condo in wherever the SpaceX rockets are in Texas because like he wanted to go see the rocket launches, right? And we would try to plan it out, but the problem is that they would say there would be a launch and then they would cancel it and then, it's like you can't plan like a whole trip around a rocket launch and then at the last minute it's scrubbed and then, all of that. So, there was one point in my life where we had considered, "Oh, maybe we should get like a condo down here," and this was like before it was popular. We never ended up doing that, but um I still wanna go see a rocket launch sometime. And now our 3-year-old is obsessed with it. And he dead seriously told me that when he grows up, he's gonna be in space and that he's not gonna be here on Earth with me because he's gonna be in outer space. So, come to Florida for that. SpaceX was just as exciting today as expected, and I'm exponentially sick of it. Yeah, we definitely have to go to NASA. But as far as the IPO, I mean, that I'm not gonna do anything with it at this point, except for just wait until it kinda comes back down. And then if you look at the space stocks, um, one thing that we talked about yesterday when oh, they have a space camp for kids, awesome. So, one thing that we had talked about yesterday was the fact that on our short squeeze watch list, the space stocks were all flying. And I said, I do not want to buy them, even though they're at the top of the short squeeze watch list, because you just wait and see. This is a buy the rumor, sell the news event. And that's exactly what we're seeing here today. Fly is down 18%, SIDU is down 16%, ASTS down 14%, Lunar down 11%, SATS down 10%, BKSY down 9%, Rocket Lab down 9%, Planet literally every single space stock that we've already been trading and already out of um is getting completely hammered today. So, this is the buy the rumor, sell the news event we have been waiting for. And hopefully, everyone was aware that was going to occur and is not exponentially long. These aggressive space stocks that we already made money on and we were already out of. So that is basically, yeah, you guys called it on the traders call. Well, thank you. That is what we try to do. We are not always right, but that is the goal. We try to help people. Um, so anyways, with these space stocks, I'm sure that they'll give us some more opportunities. There might be some more opportunities like before earnings. That was kind of when I was trading them last time. I was trading pre-earnings momentum on a lot of these names. Um, but as of this point right now, I mean, there's just nothing to do with them. Lunar, Rocket Lab. So Rocket Lab actually looks pretty good down here on the 50 simple. I mean, if you were looking to buy long-term stock in it, I don't see a problem with that because it has pulled all the way back to the 50 simple. It's bouncing. Um, this one doesn't have positive earnings hot zone stats. So I don't know that I'd want to do that one for a rally going into earnings. Planet Labs, we already traded this one so many times. It got hammered after the earnings report, but we were trading it in here, so it didn't matter that it got hammered after the earnings report. ASTS getting hammered. Again, we traded that one for the post earnings move, not in it right now, so there's nothing to do with that. Buy the rumor, sell the news, guys. BKSY. Yeah. So, anyways, I don't see anything to do with the space stocks. If you want to buy SpaceX because you said you wanted to buy it the day of the IPO, like, don't let me stop you. Like I said, I bought one share for my 12-year-old just for, just to tell him when he gets home from school, hey, I bought you one share of SpaceX IPO because he'll be so excited. That was the only reason why. And then later, when it falls, we can buy more at like a better price. Um, But as far as the other tickers that I'm looking at right here, CIFR is coming up on the request. I think this one looks good. This ticker, this one in Galaxy have been kind of a pain. They just are volatile stocks. Um, they can be a lot harder to trade just because they don't have solid trends. Um, So, I mean, I like the company, it's only $24. The options are pretty cheap. Um, what I do really like about it is that if you look at the earnings hot zone average during the pre-earnings time frame, it's up 12%. So it's like, if I'm gonna try to buy it, I'll try to buy it during that time frame, which is gonna be the beginning of July. It's just not really very consistent. It doesn't have a consistent trend. But I mean, I like the name. Um, let's see. And if you look at the squeezes are definitely getting ready to go. So I think it's fine to come in here and trade it. Just keep in mind, I mean, it's not a hey, it's just not a very consistently trending stock, but I think it looks good. Let's look at the options. And the thing that's good about these lower price names is that the options are really affordable. You can get some Delta 60s for probably like $3.75. You can get some Delta 70s for $5. If you go out into August, you can still get long options for probably 650. SpaceX IPO made millionaires out of hundreds of their employees. Elon was granting stock as a part of their compensation to all workers. I have a sweatshirt of Daryl's that is like we've had for a really long time, and I wear it all the time, and people are always asking me, "Oh, do you work at SpaceX?" Because there is a SpaceX campus near where I live. Like, no, but that would be really cool. I tried to talk my brothers into trying to get a job there because it looks like they treat their employees like really well. But they were hiring for like entry level positions for six figures. And I was like, what? Who hires entry level college grads at 100K? And I sent it to my brothers because one of my brothers got laid off and he's been out of college for like 5 years. But I was like, look, this is better than the job that you had. Like, go work at SpaceX. What are you doing? um, anyways, I like SpaceX, but APLD looks awesome. I already went over this one at the very beginning. Um, This was this was one of the first tickers I went over, but it looks great. You have a slingshot squeeze, holding the 50 simple, shifting higher. It's the AI infrastructure names that are rallying today. APLD, Iron, NBIS, Galaxy. I will say that I didn't get out of my Galaxy trade at a perfect time. It looked like it wasn't going to take off, and then it did finally take off today, and I had already gotten out of it, so that's a little annoying, but I can't say that I'm perfect, guys, but I'll tell you via my hindsight newsletter when I could have made a better trade than what I did. I got out of it because it just looked like it wasn't going to break out. And you had this big wick at the top of the candle and it was selling off and things were kind of volatile. And then of course now if you look at it, it's perfect. It's like, well, you should have stayed in 3 more days. So if anybody stayed in Galaxy, it made it another newer high today, but I also don't love the way that it acted because with these short squeeze tickers, what you want to see is when it makes a newer recent high, you want to see it blast through that high because of the short float. So that's why if it doesn't do that, it's not super favorable to me, but this one did still end up working. CIFR and Galaxy, they're just kind of like that. But I mean, I think CIFR looks really good right now. It's up 10%. And then if we look at the short float, it's at 15% short float. So let's look at the weekly chart too. And you're like right near the high. Actually, this is looking better and better to me because You're within $5 of the previous high with the 15% short float, and you're up almost 10%. All right, you could talk me into this one. Um, yeah, so I think it is looking a lot better now. I don't love all of this trend down into here, but I do really like this shift. I do like this buying volume. Let me just see if there's any. Don't have that much time left, but just want to see if there's any catalysts coming up. Oh, no worries. Tell me why it's rallying today. Are there any new catalysts on the radar? Danielle, I like your channel. Well, thank you. Is anyone having any issues with the volume? Usually the issue people will have is they'll say, "You're breathing too loud. We can hear you breathing. What is that?" So I'm always trying to walk the line of being loud enough, but not obnoxiously breathing. And yeah, no worries. I'm always happy to review something again, especially if it's one of the setups I really like. The only reason why I was a little hesitant to just lay into all of these is because you have all of these stocks that are up big, all of these AI infrastructure data center names. You have, Neo Cloud names are on fire today. You have NBIS that was included into the NASDAQ 100. You have CIFR that's up. You have IREN that's up. APLD is like they're all up today. So I don't have a problem with jumping on stocks that are up 10% that have high short float because if they're right near that previous high, they can break out and explode. However, I don't want to lay into all of them at the same time when they're all up 10% because they're all very volatile. And if you do all of them at the same time and you have all of your positions concentrated in one area of the market, all it takes is one news report and then they're all down at the same time. So it's like, it's awesome when it works in your favor and they all go up at the same time. But it is not so awesome when they all go down at the same time. So I do try to be really mindful of spreading my risk out. Um, and I just don't wanna lay into all of them at the same time. You see what I mean? So, but I do really like this one. It looks like CIFR had some financing news. Looks like they raised some money. I don't see anything new on IREN. It just looks like there's positive sentiment around the Dell Nvidia deals, larger power capacity. Just trying to look on another monitor, seeing if there's anything new coming up. Mm. Yeah, it looks like they're just all kind of trading in sympathy. That is so wise. When I was a new trader, I learned the hard way. Yeah, we just don't want that. We don't want to wake up that way on Monday. Then you'll have a day like I had last Friday, says Rick. Oh man. No issues with volume. It's fine today. Oh, and then I had some requests for Intel. That was another one that was looking so good. Dang, I knew I should have gotten that one yesterday. Um, literally any pullback in this market has just been like close your eyes and buy it. That's what it's been like. Intel, I was getting set up to buy this one before earnings. This one looks like a great pre-earnings momentum run. Um, and the reason for that is because it has do you see that breakaway gap from last quarter? So I have a class tomorrow where I'm gonna go over my full pre-earnings momentum strategy, and, basically this is definitely one of the ones that was fitting my criteria. And as you can see, like, it's not entering the hot zone today, but it's entering that time frame where people are gonna start talking about it. Yeah, I think this is a great one. It's already up 6.8% today. Again, I'm trying not to just lay into a ton of different tickers that are already up like 7, 8, 10% today at the same time. Um, but it looks fantastic. I love it. Long options in the earnings series are how I would play it. Taiwan Semi, this one I'm definitely planning on buying. The options are pretty expensive on it though, so I'll probably end up maybe like selling some put credit spreads or buying a butterfly, but I was planning on getting into this one next week. Um Let me see any requests that I missed. Broadcom and Google. INTC got an upgrade this morning. Knew I should have bought that one yesterday. Obviously, I would never I don't ever have any idea when exactly the news is gonna hit. The reason why I wanted to buy it was really just because it was getting close to the earnings hot zone, and then also because of the squeeze, because it pulled back. It had this really great rally. Um, it had this great rally after earnings, and then it pulled back. So this is typically a pretty solid pattern, but I mean, there's obviously I don't know when there's going to be an upgrade or not upgrade or anything like that. Um, so, but those things tend to happen around earnings. Google. All right. So the Mag 7 is just it's just not really doing me any favors. I will say out of the Mag 7, Google and Broadcom are definitely the best ones. Um, Apple has had more of a fundamental shift recently where you have a situation where it hasn't been very consistent, but now you have a lot of interest in it because people are buying MacBooks like crazy because of all of the AI platforms you can run on them better. But Google and Broadcom are definitely the they're 5-star ranked stocks. Um, they fit my 5-star criteria. If you look at the earnings hot zone, you will see that it has a 5 out of 5 rank. The trend 60% green. If you look at all of the 5-star earnings stats, it's green, 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 green. Except for this one right here, which is yellow. Post earnings momentum. It kind of does a womp womp move um, with that post earnings momentum. So if you're looking at that kind of situation here, I mean, this one looks great for a rally going into earnings. I'll just tell you that the Mag 7 stocks have just been kind of lame. Um, I've just seen a lot of volume and a lot of volatility going into these AI infrastructure names, and it's just kinda leaving the Mag 7 behind, but, you know, this is a 5-star ranked stock, it's gonna enter the hot zone the week of the 22nd. So, give it another 4 more days, and then it'll be in the hot zone, and what's crazy is, I mean, I used to trade the Mag 7 used to be something that I would do every single quarter, you know? It's like, let me buy the Mag 7 every single quarter before earnings. And so that used to be what I did. And then probably around like 2 years ago, it started changing where I started getting hammered on, specifically my Microsoft rallies going into earnings. That one used to be the easiest one where it was like, okay, every quarter before earnings, like let's just buy it. And then around 2 years ago, it just started getting hammered. And then the consistency completely dropped off. And all of a sudden, you have a stock where if we go back and look at the longer term trend here, so like I said, like this used to be literally one of the easiest stocks to buy. It's like buy before earnings, buy before earnings, buy before earnings. And then even after the bear market, it was still good for a while. It went back into that normal buy it before earnings kind of rally, but then right around here, that quarter, 2024, July 2024 quarter took a nice hammering, and ever since then, it's just hasn't been the same. So, if you're taking a look at Google and Broadcom, which are both five-star ranked stocks, um, I mean, I think they look great. I own both of them. I think the trends are amazing. I think that they're better than the rest of the Bag 7 right now. Um, I don't love how this has broken down below the 50 simple on the daily chart, but you can see how that momentum is shifting. You can see how the volume is coming in. But most importantly, the time where it generally picks up is during that pre-earnings time frame. So, and the reason for that is because people are like, "Hey, look at what happened last quarter. It was up 6.9%. Boom, let's go." Now, Broadcom is a little bit different because Broadcom took a bit of a hammering after earnings last quarter. This is the second time Broadcom has done this recently, where it went into earnings on the high of the quarter. Um, 3 quarters ago, it did the same exact thing. We traded this, massive rally going into earnings, made money on it, got out before the earnings report. Then the earnings report came, stock got hammered. It was down like all quarter, which by the way was a great time to buy more. Um this quarter, do you see how like the quarter after the earnings hammering, it did not rally into earnings? That's because it doesn't have the same psychology, right? It's like if you're trying to think about a place to buy it and it got hammered after earnings a quarter before that, are you then going to try to buy it right before earnings? Probably not, right? So, anyways, this quarter, um, things improved, started going higher again, traded this great rally. It almost hit $500 a share before it got hammered after the earnings report. Um, At this point, I don't know that this one's gonna have a strong rally going into earnings the next quarter, even though it's a five-star ranked stock because it was down 14%. But this is still one of the top 5 stocks in my long-term stock portfolio, and I would absolutely buy more of it here. Um, Even though it got hammered, the earnings report was phenomenal. Um, Chip makers are the future. Yeah, I would buy more of it. But I wouldn't, but you have to think about the time frame. Do you want to buy it for the next 3 weeks or for the next 2 months, or do you want to do a short-term options trade going into earnings? Probably not. But as far as me adding long shares to a long-term stock portfolio to continue adding shares when the stock is down, yes. Does that make sense? Do. Any SOXS analysis? My analysis is that I wish I would have put my entire account into Soxal and closed my eyes and gone to the beach. It's on its way back up again. Semiconductors have been phenomenal. I think Soxal, this is the multiplier ETF here. Looks like it's going to head up into $300 a share. Looks phenomenal. SOXS. Personally, can't say that I'm not into, I'm just not into betting against the, semiconductor rally. I know that it's been insane. Um, I know that it's been insane. It's just not the way that I approach the market. I approach the market by looking at the top relative strength areas of the market. I look at earnings trends. Um, the earnings trends in the semiconductors have been absolutely and completely on fire. It's not a situation where they're rallying for no reason. They're rallying because of the massive demand. So I personally um am not going to go against this rally. There was a time frame where I, on a short-term basis, if you read my 5-Star Trader newsletter, I had shorted SMH and I made money in here, which was when it broke. This was when the whole market was pulling back, the end of February, beginning of March. Um, if and when the market starts to pull back and the trends actually shift at that moment in time, then yeah, I would come in and I would make some bearish trades on SMH, which is what I did back in here. And I did that because there was a trend shift. You can see that the green goes to yellow to red to bright red. You had high volume selling. Um, the reason why I do that is because these relative strength areas of the market, if and when the market does finally shift or forbid turn into a bear market, these areas they get hit really hard really quickly, right? So I would do it for a short-term trade in that moment in time. However, you have to just be really careful with it because the very second that things improve, they rip faster than you have ever seen. So, when that move was finally over, it broke through the 50 simple and then it was just off. So, I'm not going to short it up here. I think this is one of the most bullish patterns that exist in the market right now. It pulled back into the 34 EMA, it bounced perfectly, like it couldn't be better. Um, you have a daily squeeze that looks like it's gonna fire to the long side. I think this is heading up to $700 a share. So I would personally not want to get any of the inverse SMH ETF um, unless that trend shifted and changed. I think if anything, buying like this is just crazy. This ticker is just insane. It's gone from $46 down here at this low up into 234. Crazy, crazy, crazy. All right, the market has just closed. So today I'm supposed to stay after to do a question and answer session because I have a class tomorrow, but I will go ahead and keep answering your questions. And I will also take any questions about the earnings hot zone and the pre earnings momentum strategies that I have. Tesla today, I mean, there was just so much talk about Tesla potentially moving due to the SpaceX IPO, and I don't know. I don't really think that I just don't personally feel like I'm gonna sell my Tesla shares to buy SpaceX. I just don't think that makes any sense. I guess people could do that, but the companies are probably gonna be combined at some point. So I don't understand why I would sell my Tesla shares that I've had for a long time to buy something else when at some point they're all gonna be combined. Then all I'm gonna do is have to pay taxes, which I wanna avoid. So I just don't understand why, that commentary keeps being brought up. Um, maybe there are people doing that, but I'm not gonna do it because it doesn't really make any sense. So yeah, it doesn't really make any sense for me to do it. And then, Tesla is up today. So, I'm not really sure how many shares I have total. I have my shares spread out through a variety of different accounts. At some point, I may end up combining all of them so I can sell more options against them or something, but let's see. Yeah, I mean, I think Tesla looks fine. You have a daily squeeze, it's trading higher today. I don't think massive sell volumes coming in to buy SpaceX. SpaceX ended the day up 19%. So I think it's pretty common for a new IPO to come out and for people to buy it. So it's up almost 20%. Like, that's great. Um, I think it's fine if you want to buy some shares the day of the IPO just because. So you can say you bought shares of the IPO the day that it IPO'd, and then, 5 years later, you can look at it and see what happens. Um, I wouldn't do that as a trade if you're gonna do it for a short-term trade. And the reason why I wouldn't do it for a trade is because the vast majority of the time, IPOs rip 1 or 2 days and then they tank after that. Um, Daryl and I have debated this so many times, and his argument is basically that why would the SpaceX employees sell their shares? Because now they're, millionaires. Nobody's, this is like the beginning of the growth trajectory. Like, that's not going to happen with SpaceX. That's the argument against that kind of move. So maybe SpaceX will be different. A lot of IPOs don't have the kind of revenue that SpaceX has. Um, so it's possible that it's different. You just have to think about your time frame on the trade and how much you love SpaceX. For Poets, this is a trade that I have on currently. This one is not a pre-earnings momentum trade. So, people are always asking me about like the different kinds of trades that I do. And I 1000% prefer the squeeze before earnings. Generally, the squeeze before earnings for me is going to do better than the squeeze at another time. The reason for that is because what the squeeze is it's consolidation that's getting ready to break out. When you are a squeeze trader like myself, what you are doing is you're buying a stock and you're saying, you know what? It's consolidating. I think it's going to break out, but I don't know why it's going to break out and I don't know when it's going to break out. But I'm going to get in because it's squeezing and it's consolidating and it may take off. The reason why I personally prefer the squeeze before earnings is because you have that nice little light on your chart that says, hey, guess what? This is when there's an event coming up, and this is when people are going to be talking about it in the news, and it's going to be on social media, and there are going to be, people are going to be talking about estimates and upgrades and all those things that happen before earnings. So it's just kind of a like, I hate to call it like a cheat code, but it kind of is, because if you look at Poet, I'm in Poet right now for those of you guys who don't know. I did buy the squeeze after the earnings report, and it's been just like kicking me in the teeth because there hasn't been a catalyst. I'm just waiting for it to take off. Today, yes, it was up 11%, so it's doing better today. That's great. But if you look at the pre-earnings move, like, this thing rocked it before earnings. So, you know, I just prefer trading these things before earnings. I do trade other squeezes that are not right before earnings, but my favorite time to trade the squeeze is directly before earnings. And that is because you have not just consolidation that may break out, but you also have consolidation that may break out because of a known event on the calendar. And on top of that, you have a rise in implied volatility. And that implied volatility is going to rise into the known event, which is earnings. So, even if the stock doesn't go up that much, like for example, this Google chart right here, my earnings hot zone average is showing that this ticker is usually up 7.6% before earnings in the earnings hot zone timeframe. So it's just one of those things where it's like, can you capture the rise in implied volatility through trading options in addition to the rise in price? So it just gives you more factors that you can combine together to give you a more solid trading idea. So looking at Google, asking me about Google and saying, "Hey, would you buy it here?" It's like, well, it's getting really close to that pre-earnings momentum time frame, which is, right here. Um, where I know for a fact that this thing is going to be the implied volatility is going to be rising going into that event. And I cannot ever tell you that it for sure is going to go higher before earnings. But what I can tell you is that over the last 2 years, on average, it's gone higher by 7.6%. So, if you go back and you say, okay, well, how many quarters did your trade work? Well, that's the great thing about the tool is it's literally like a back tester right here. You just look at it and you see for yourself exactly where the pre-earnings time frame is and if it worked or not. So everybody's like, "Oh, well, how often does it work?" It's like, "Well, look at the chart. You can see it right here. Like, look at each individual ticker." Like, it's not one of those things where you can say every ticker works this amount of the time because different tickers are different. This one's a 5-star chart. What that means is that it's working 70% of the time on this grid because that is how it's coded. It is coded to demonstrate when the move happens, it turns green when it's 70% of the time. So if you go back and look at it, this quarter right here, entering the hot zone, boom, it was off. This quarter entering the hot zone, boom, it was off. This quarter, boom, it was off. This quarter, boom, it was off. This quarter did not work, got hammered. Not working, got hammered. This quarter, it was yellow, so that means that it was basically flat. This quarter, it was yellow, that means it was flat. So if you go back in time, you can say, okay, well, recently it has worked 1, 2, 3, 4 quarters in a row. This quarter right here, it did not work. But honestly, if I was trading it that quarter, and I don't even remember if I traded it that quarter or not. Um, March 25. Honestly, I don't remember if I traded it that quarter and lost money or not because it was a long time ago. But I can tell you that looking at this chart, if I had a chart that was entering the hot zone and it was entering the hot zone on the low of the quarter, I would not have tried to make a bullish trade that quarter anyways, because it would not have fit my technical setup criteria. So I can't really even say like, oh, I would have lost money that quarter. I can tell you that it did not work that quarter. Um, but I can also tell you that you're trying to combine this idea with technical setups. So that setup would not have passed because I do not come in and buy things for a rally going into earnings when they're getting hammered. Does that make sense? I'm looking for stocks that are in a bullish trend, um, that have positive strength, positive momentum, and then they hit that time frame where I know that implied volatility is going to be rising. And if you can combine the rise in implied volatility plus the historical rise in price, that's how you can time purchases for long options. So you want to look at A Lab. Um, A-Lab is amazing. This is one that I had picked out on Charles Payne, like, a while ago, and I don't remember exactly when it was. I think it was one of the first segments that I did this year. Um, and I bought the shares of stock at that time when I was researching it for, Charles Payne, and I came across it, and I was like, "Oh, this is a really good one." Um, but at this point, it's like, what am I gonna do with it, you know? Um, I I like the name. I think it's been on fire. This is a ticker that if you use my earnings hot zone grid, you can see that it's ranked 4 out of 5 stars. So if you missed my webinar last night, basically what you will what I can tell you about that is those are the 5 criteria that I use to determine if something may have a pre-earnings momentum move. So I'm looking for confluence. I'm looking for 5 different factors. If it has a 5 out of 5, that means I'm gonna take a chance on it because that confluence of factors I have noted over time make for the best combination. It doesn't mean it's for sure gonna work. It means that it has the highest confluence and that if you go back in time and you look at you know, the trends of the past, you will see that it does work most of the time. Now, 4 out of 5 isn't the full 5 out of 5. And if you're looking at the 4 out of the 5 and you're saying, "Okay, well, what is it failing at?" So each star it'll note on the grid down here what it's coming from, and the star that it's failing at is the trend. So, what that means is that based off of my criteria, this chart doesn't have enough green trending bars to have it categorized as a chart with a strong bullish trend. So typically, for these pre earnings momentum moves, I would prefer to see a strong bullish trend because jumping on a trend is easier than trading something that's kind of all over the place. Um, but nothing is perfect, nothing is 100%. It gets 4 out of 5 stars. First of all, it's beating earnings estimates 8 out of 8 times. Fantastic. It has EPS growth quarter over quarter. The estimates have grown 7 out of 7 quarters. The actuals have grown 6 out of 7 quarters. That's really, really good. And that's one reason why I ended up buying the long term stock. Um, then the third component is the trend. I mean, 49% green bars, 50-50, not great. The fourth component here is going to be the gaps. So it's gapped up 5 out of 8 quarters. It's okay if bullish stocks gap down sometimes. I prefer the gaps to be more in the past than in the present. Um, but it is a more bullish sign when stocks are gapping up after earnings because what that means is that the earnings report has occurred and people are excited about it, you know? Broadcom wasn't that great, gap down like 14%. You know, I equate some of that to the fact that it was at a new all-time high before earnings, so that can happen where you have a stock that's just rallied so hard going into the earnings report, and even though the report was good, it will still gap down. But overall, when a company is just continually gapping up after earnings, like, it's a bullish sign. Um And then you have this component right here, which is how did it behave in the hot zone in the past? The hot zone is the time frame before earnings, and if the ticker gets a pass, that means that it is regularly rallying going into earnings. Again, not every single quarter. This quarter got hammered. This quarter got hammered. But it's a probability, and it's something that gives me another reason to get into a trade. It's like, if you add all these statistics on top of your idea, and then you also look at this, and do you see what this says right here? Hot zone average. During the pre-earnings timeframe, this thing is up 17%. Like, what? That's huge. So for me, it's like, well, I'm gonna try it. It's up 17%. Like, let's rock. So it's not entering the pre-earnings time frame yet. And I will say, this is part of what like I teach in the class too. I'm having a class tomorrow. Um, you don't really want to buy it when it's at a new all-time high, which, I think all traders know that we try to avoid buying stocks when it's at a new all-time high. Sometimes it can work with if it has a short squeeze. But basically this kind of criteria is like exactly what I'm looking for, and then I'm trying to time my entries when the implied volatility starts to spike going into earnings. So, um let's see. Danielle, I bought your pre-earnings momentum package for your classes Saturday. So excited for TradingView. Doesn't have the hot zone accelerator indicator. Will it be included? Let me ask if Daryl can do that. We could probably do the hot zone accelerator in TradingView. The hot zone itself is just so complex. And it was just too much for TradingView. So I was not able to get like the full hot zone in TradingView. We were trying to figure out if we could do like maybe just the stats. The issue is that it all goes together. So the stats are driven by the clouds. So these are the clouds here. Like they work together. So if this average over the last 2 years is 17%, that's coming from these moves, which then that impacts the color of the clouds. And then the ranking system is coming from the stats. So it's one of those things where it's like, okay, well, if you just do part of it, then you know, we didn't have a ton of requests for TradingView, but I think we could probably at least do the hot zone accelerator, just because it's the, less complex piece here. But let me go ahead and take a picture of this one because I think this is a really good one. If anything, it would have been great to buy it like 2 or 3 days ago for a trade. At this point, it's already made a new high. So I would just rather wait and see if I could get a pullback on it. But I love the ticker. I love the ticker. I think it'll make for some great trading. It's just not really a great entry right now. For BE, I actually put slides of this in the class, and this was one of the top ones that I wanted to buy going into earnings. I was really trying to wait on some of these entry points because, I have the class next week, and also because you're not exactly at the hot zone, but part of the hot zone is like it doesn't have to be that exact day. If you get a pullback, it's bouncing, you can see earnings coming up. You don't have to wait for this exact day. Um, this one looks great. You can't really argue against like a 22% gap up. And it's not just one gap up, it's 22%, 12%, 14%. Green, 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 green. Like what more could you want? So you definitely have an earnings trend there. You have a 4 out of a 5-star rank. The trend is not passing, but it's really close to passing. It's at 53.2%. I have the calculations set at 55%, so it's really close. But it is failing on that star because of the red trend bars. It has a pretty decent amount of red trend bars, but those red trend bars are also, it's not the worst thing. It's just kind of a situation where if you look at the weekly chart, do you see how it has 2 massive weekly squeezes? So sometimes when you have a lot of red candles on the daily chart, it's just because it's been in a weekly squeeze for a long time. Um, and it doesn't necessarily mean that it was in a bullish trend. It wasn't in a bullish trend, it just might mean that it was consolidating for so long. So, if you look at BE on the weekly chart, it was in a weekly squeeze from January 5th until April 20th. So, when a ticker is in a weekly squeeze, it's not really gonna move. It's just kinda stuck in a sideways range. So, that one is failing as far as the, trend on the five-star ranking system, but when you go into more detail and you really look at what's actually happening, it's like, yeah, I'd try it. How did your rating look for Oracle this week? I actually took a picture and put that in a slide. Let me see where that is. So I had the earnings hot zone rank at 2 out of 5, which is, you know, not very good at all. Um, the expected move targets were down here, like $25, which projected the zones in here. Projected the zones. The 2x move would have been down here at 150. The 1.5x move was like 175-ish. And then the 1x move was just right around like 180. So that was what it looked like before earnings. And then after earnings, I mean, it traded like directly down into that zone. So I feel like that one worked out really well with the projected move targets. Um, Oracle overall has not been in a strong run into earnings. I actually shorted it last quarter. This quarter, it did, kind of shift around. We had people coming in, and basically, what will happen with these names that just get hammered for um, quarters and well, not quarters and quarters, but I would say like weeks and weeks. Basically, what will happen is at some point, everybody sold it, and then people will start buying it. That doesn't mean though that it's a good run into earnings candidate. Um, so it definitely, even though it rallied going into earnings this quarter, it definitely did not have a 5-star rank going into that earnings report. Um, and I would say the primary reason I suspect it rallied is because you can see how last quarter it gapped up 11%. But this one's definitely like an earnings destruction ticker for me. I would get back to shorting it before earnings next quarter personally, because now that it had like a failed rally, this for me, because it has a 2 out of 5 star ranking, because it's gotten creamed twice after earnings, because you had a failed rally there, I would go back to shorting that before the earnings report next quarter. That makes sense. Thoughts on BE? Yeah, so I think I already answered that one. Maybe I didn't tell you the levels exactly. Um, so 230 is a low. 250 is where the 50 simple is. 260 is, it's a little higher compared to where the ideal spot to buy is. Um, but I mean, I would still buy it here. And then as far as like the upside target, 350 and then 400. Danielle, brand new to your content. What is the tool called that you're using? So this is my custom coded tool with the help of my amazing husband. It's called the Earnings Hot Zone. And let's see, I can post the webinar replay link. I had a webinar last night on it, and I have a class tomorrow. I haven't taught a class in a couple of years. I've been just mainly focused on being in the trading room. I'm in the this is actually a duplicate of my trading room session at Simpler Trading. I'm in the mastering the trade room. And then on Fridays I broadcast it on social media. Um but this is my custom coded tool, and what it does is it helps you identify patterns surrounding earnings. So basically I trade consolidation getting ready to break out. And my favorite time to trade that consolidation that's getting ready to break out is going to be before earnings, because before earnings, you have a situation. And by the way, here, I'm going to post the link for you. Replay link of the full webinar from last night. But basically before earnings, you have a known catalyst that's coming up on the calendar. So what this does is it highlights, when's the earnings report. It draws the levels on here to show you typically when the implied volatility starts to expand, when the price starts moving before that earnings report. Then these colored clouds, what those do is those tell you how the move was the prior quarters. So, different stocks are going to be different. Not every stock rallies going into earnings. If you look at like Costco, for example, which I used in the webinar last night, do you see how these clouds are yellow and red? That is not a company that's rallying going into earnings. So, you have to be able to pick out the right tickers that it's going to work on. The tickers that it works on are going to change over time. It just really depends on like what's hot in the market. Like right now, we're trading a lot of AI infrastructure names, Neo Cloud, the energy plays are pretty hot. And the reason for this is because you're getting these moves after earnings. So, for example, with this ticker, they were estimated to lose a cent and they made 44 cents and they gapped up 22%. So, just think about the psychology involved. Do you think that people are going to be buying this stock before it reports earnings next quarter? Yes or no? And once it starts getting into the news and stuff like that, like the interest in it starts picking up, and then basically it rallies going into earnings. So what the stats do is the stats are going to give you an actual number and a percentage that can quantify your idea. The whole idea of stocks rally going into earnings, like it's a psychological thing. But you can't you can just trade the idea. I did it for a long time before I made the tool itself that helped me do it better. Um, but what the tool does is it gives you an actual objective number and a percent that you can work with, and it crunches all the numbers for you. So you're not sitting here looking and saying, okay, I think it rallied going into earnings last quarter. I think it did the quarter before that, but like where did it enter the pre-earnings time frame? Where did it exit? So what this does is it gives you the statistics that just does it all for you. So BE in the pre-earnings time frame, it's rallied on average 23%. That's just absolutely insane. That's a crazy, crazy number. 23% before earnings. So it's just one of these things where it's like, if I want to trade a stock and I think it's going to break out a consolidation, I could try it anytime, right? As long as it has a trading setup. But if I know for a fact that it's been having these massive moves before earnings because it's in this high growth period, why not do it then? Because I have statistics that are telling me It's never gonna say it works every time or it's going to do this for sure. You know, past results don't promise future success. That's not what this is doing. It's saying over 8 quarters, it's gone 23.5% on average. So, would you like to give it a shot next quarter or not? For me personally, I would like to give it a shot. Now, if you look at other tickers, like just for comparison, like JP Morgan Chase, the stock is not rallying 23% going into earnings. Now, could you still trade it because volatility is not your love language? Yeah, I mean, you could trade it. Like the pre-earnings average, the hot zone average on this stock is 3.9%. That's not bad, 4% move. If you look at last quarter, great rally going into earnings, quarter before that, great rally going into earnings. Like there's no right or wrong answer, the kind of stocks you want to trade, but that's what's great about the tool is you can use it for whatever stocks you would personally like to trade. So if you say, Danielle, you're crazy. Like, why are you trading, NBIS? Like, this thing's insane. I don't want to trade that. I would like to trade Coca-Cola. It's like, okay, great. Well, look at your stats. Um, NBIS, by the way, the reason why I was trading this one last quarter is because the pre-earnings average was 16%. Like that's just crazy. I definitely want to be involved in that. Broadcom is definitely trading that one last quarter. The average was 6.2% during that pre-earnings time frame. So, you can just go through like really any you can go through your whole watch list, you can go through different sectors, go through different industry groups. Um, and you can see, okay, does this ticker have a great shot of rallying going into earnings or not? And for the answer, um, for the answer to that, you just have to look at the chart itself. And if you look at it and do you see how there's just colors all over the place? People are like, oh my gosh, there's so many colors. Okay, that's a bad sign. If you see green and you see yellow and you see red, like what that means is that there's no trend, there's no consistency. That's why I added in the 5-star ranking system because what the ranking system does is it crunches all the numbers in the exact way that I would do it and it gives it a rank. And if it's ranking 2 out of 5 due to all of this criteria, for me personally, that is a no-go. Like, people always wanna know, like, "Okay, well then, you know, like, how often does it work?" And it's like, "Well, what do you mean?" Like, you can see if you pick the ones that are 2 out of 5, like, it's probably not gonna work very well because, um, this quarter, you can clearly see, yes, it did rally going into earnings. Just because it's ranked 2 out of 5 and it's not consistent, it doesn't mean that it's not gonna rally into earnings. It just means that I don't personally want to put my money at risk on it because it's not a likely probability. Because what I am doing is I'm looking at probabilities. I'm saying, "Okay, this stock has rallied into earnings in the past. Like, let's just take a stab at it because it's done it every quarter. And if this quarter I get my teeth kicked in because of some random reason, like that's how it's going to play out. But I'm looking at Taiwan Semiconductor and I'm saying, you know what? 7.2%. It has rallied going into earnings. I'm going to give it a shot. It's entering the pre-earnings time frame. Like, let's rock. Um, so bots, people keep reaching out to me about trading bots, and that is just not something that I want to do. I'm not interested in it at all. I don't know. I guess in theory, you could try to do that, but I don't want to do that. I'm not interested in it. I haven't set this up on a bot system. Um, could you, in theory, train a bot to buy stocks exactly 21 days before earnings if it had the 5-star rank? I mean, I guess you could, but then you have to take into consideration like where is the chart on the stock? Like where is the stock on the chart? Is it pulled back? Is it at a brand new high? Is it in a squeeze? Like it's not just, "Okay, I wanna buy it on this exact day." It's that's the time frame that I'm looking at, and I'm gonna try to optimize my entry, and then after that, you have to consider what kind of options are you gonna buy? Are you gonna buy long calls? Are you gonna sell puts? So, I don't know. I'm too controlling to use a bot system. I don't see how I could do that. Um, that's just not gonna work for me. If you wanna try it, go for it. But there's just a lot of nuances involved, which is why I'm teaching a class tomorrow, and I'm gonna go through all of those different nuances. But, the base of the strategy is I've built this tool to do my analysis as quickly as possible because I do a lot of TV segments. I have 3 kids. I'm in the trading room every day. I get chart after chart after chart thrown at me. And the quicker I can do my analysis, the more time I have to trade. When you're spending like 3, 4, 5 hours a day, like trying to do technical analysis and trying to pick out your favorite charts to trade, that takes away from the time you can actually sit there placing your options trades. So it is my goal to have tools and strategies that I can use that help me narrow down and find my favorite tickers so that when I sit down at the computer, I can put my trades on. Does that make sense? Show us your face. Today is just not the day for that. If you check out I posted a link in the chat with the webinar replay. I did have the camera on yesterday. So if you want to see my full webinar, check that out. Yeah, and the classes tomorrow, the tools all come with the class. So if you want the tools, I would recommend getting the class because then you will know how to use them. And then at that point, if you want to make your own trading bot, don't let me stop you. But I'm not gonna do it. Um, it's called options, not bot tons. No face included. I do the whole on camera thing. Um, when I can, but it's not something that I want to do every day because it takes me a lot of time to get ready and it that takes away from the time I can sit here and trade and write newsletters and make content and all that kind of stuff. So if I spend, 2 hours doing my hair and makeup, then it's like, all right, do you want trades or do you want hair and makeup? Take your pick. Today is not a hair and makeup day. Today is I am working on my slide deck for tomorrow day. Um, GEV, this is another one. And Katie, you're the one that found these, which great job. These look awesome. Earnings hot zone average, 6.9%. This is one where it's like, 6%. Like that's a pretty good move. Um, Pretty good move. Nothing too crazy. It's not a 23% move, but if you're not the kind of person that likes to trade stocks that have insane moves, I mean, hey, like 6%, it's a good move. It's not my favorite technical pattern just because it's coming down and it has broken through a lot of these support zones, but it is reversing off of the lows. You can see where it's failing in the star system. It is not passing because of the EPS growth. So I just like to go back and estimate and see, okay, well, what's going on here? Okay, it did grow last quarter. It grew the quarter before that. So you can see this quarter, it missed. So that's one quarter it would fail on the system. So like I used to just do this like I would go quarter by quarter by quarter and try to mentally calculate how many quarters it grew and how many quarters it did not grow. And so now I have this little bar right here that just does it for me. So you can still go back and, every quarter look at it and see, okay, did it grow that quarter? Yes or no? But obviously, it takes a lot longer to do it that way. That's why my amazing husband spent a very long time coding this for me. So this quarter, it yeah, didn't work that quarter. So it's not getting a 4 star um because A, it's missed its earnings estimates 3 out of 8 quarters, and because B, it's not demonstrating consistent quarter-over-quarter growth. So, that's why it's only ranked 3 out of 5 stars. However, despite the fact that the fundamentals are not really in line, it is still rallying going into earnings. So, what that demonstrates to me is that people are still excited about it. And I would suspect the excitement has something to do with this, which is, okay, wait, it was estimated to earn $1.78. I made 17.44. What? So when I see something like that, that's then when I would go and research the company and I would say, okay, what happened last quarter? Why did it have this massive beat? Tell me more about this gap. Because I that is an outlier. So if I was going to start buying this company before earnings, I would want to just understand, is that a one-time thing and so that's when the AI prompting doc comes in handy, which comes with the class because you can then say like, "Hey, here's a picture of my hot zone tool. You can see the trends, you can see the ranking system. What happened with this company last quarter? Is this something where the momentum is likely to continue? Because I want to buy this stock before earnings. Like, what do you think?" And then it can give you the different catalysts that are coming up. I think something that's helpful about AI research is it can pull from the internet all of the different events that may be impacting that company. So things that are really obvious that everybody knows about, we all knew there was a SpaceX IPO today, but for something like this, it's like, are you going to be aware of all of the potential news events that could impact this company in the next month? I mean, no. Who's going to be aware of that? Nobody. But guess what? You know who's aware of it? The AI bot that can scrape the internet. So you can go and you can search like, is there anything upcoming that may impact this company's stock? And there may or may not be, but you at least can get an idea of, is there something coming up that could be a catalyst? Because when you're somebody that's trading directional moves, you do want to have an idea of, oh, there's a major company event and it's going to be next week, something like that. Um, Danielle, what about AAOI? So I did already get out of that one. All of the alerts are posted in the alert box up above. Um, I I got out of it the day before it was down 18%, and I'm not gonna say like I'm some sort of genius or anything. Um, it was a little bit of a lucky exit, but the reason why I got out of it was because it just kept failing at these overhead areas of resistance. And so when you're in a short-term options trade and the ticker keeps rallying into a specific resistance zone and failing and coming up with a wick, usually that's a signal to me that I want to go ahead and get out. So I did get out of that trade and I made a couple $100. It wasn't huge, but I at least was up on it. Um, and then just coincidentally, the next day it was got hammered. I noted at that time that I was going to pursue another entry in this stock because even though it got hammered, it just pulled back directly into the 50 simple and it's still consolidating, it's still squeezing. And I think it's good for another entry, but the issue with my trade personally was that it was running out of time in the options market. Do you have a scanner for the scans for the 5-star tickers? Daryl is working on that. D, where's my scanner? Here, I'll send a message. We'll be finishing all of this tonight, and it should be all uploaded to the class folder. He has a very long list of things to do from me. He I asked him a few times, like, "So did you ever, regret, like, helping me with all this?" Thought it was gonna be, like, a quick, 5-minute thing, and then, like, 3 months later, it's, like, his entire life. But he said he still loves me, so it's cool. Um, I have a I have a screenshot of the one that he gave me. So, this is what we were working on. Um, we were basically working on a watch list column to go with the Thinkorswim scan. So, I do currently have a Thinkorswim scan that identifies tickers that are going to be entering the hot zone. And you can adjust the time frame so you can say, "Hey, I want tickers entering in the next week. I want tickers entering in the next 2 weeks." Um, so when you're looking at what this is gonna be a watch list column that when you run your scans, it's going to rank the tickers based off of how many stars they currently have on a one-year chart. So, I think he was almost done with it, but I'm sure he'll finish it tonight. Um, we just had one slight issue. We were waiting for my mom to come over to watch the kids yesterday, and I called her and was like, "Hey, when are you gonna be here?" And she was, like, hacking up, coughing, and, clearly very sick. And she's like, "Don't worry, I know it's your webinar, I'm still coming." And I was like, "No, no, 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 no. That is okay. You do not need to come over here. We cannot have any of that." I was like, "Why didn't you tell me you were sick?" She's like, "Well, because I know you have your webinar, it's so important." Like, "Yes, it is very important, and thank you for offering to come over when you're sick, but also no thank you. You can stay home." So anyways, we just, Daryl had to replace the grandma nanny yesterday. So he was, like, literally in the middle of finishing the scanner when that happened. So so that was why I wasn't done. But he's gonna finish it tonight, don't worry. Looking forward to the class tomorrow. You're an amazing teacher, really. Oh, thank you. I was wondering if the stars can be brought into columns. You're working on it. Yes, yes, that is what we're working on. Are you a fan of Sosnoff? Yeah, he came to our last Simpler Trading event. I've met him a couple times in person, and, when I first started trading and I couldn't get approved for an options trading account, I did Tasty Trade had some sort of course that you can do where it gives you a certificate that says you know what you're doing, and then you give it to your broker to try to get approved as an options trader, and I did that, like, 13 years ago, so, um what trading style, time horizon do you employ? So, I covered all of this in the webinar from last night, so definitely check it out if you're interested in it, and I can post the link for you. But I'm pretty much a swing trader. There will be sometimes, in the trading room, I'll do a day trade like at the end of the day in the SPX. Today I didn't do anything because there was just nothing happening. It was just trading completely sideways. Um, but I will day trade sometimes, but the vast majority of the time I'm in trades for usually around a week to 2 or 3 weeks. Kinda like 2 weeks is this sweet spot. Definitely a swing trader. I definitely, like, do not sit here all day long, short-term managing trades on 15-minute charts. I'm using, like, weekly, daily, 78-minute charts. I'm typically trading, like, the last 2 hours of the day. That's my favorite time when things are really getting moving. There's just a lot of movement first thing in the morning where it's like panicking from overnight. I mean, just look at today's example. It's like, you know, the market opens, sells off hard. I've just learned over and over and over again, like, there's really no benefit of, like, trying to get out of your trades immediately when the market opens, just typically doesn't ever work out in my favor. Even when I do it sometimes, usually by the end of the day, things are better than they were in the morning, and that's, of course, dependent on the market condition. Right now, we're in a strong bull market. Um, so I generally don't adjust too many things first thing in the morning. Um, right now, I got into IREN today. Um, this one I'm looking for a breakout going into like $70. I also buy long-term stocks. I started doing that because I do Fox Business and CNBC and stuff, and I I don't know. I started employing my 5-star strategy to create like a stock portfolio and build it back in 2019. And also it was just one of those things where it was like I got into trading to trade options, right? And I was trading options. But over time, I just remember I was looking at the charts and I was, looking at my different media segments that I had, and I remember it was really Microsoft. Um, and so just for an example, I started trading in 2013, okay? So look at where Microsoft was trading then. Um, and then around like 2017, I started like doing TV, 2018 doing TV. And at that point I was looking at Microsoft and I was like, why am I not just buying these shares also? So I basically started my stock portfolios from nothing and then just started like slowly buying shares. I mean, it definitely compounds pretty well over time. So I did start doing that as well, but at Simpler Trading, we primarily focus on trading options. And then the other thing that I just had really noticed when I first started trading was that the rallies going into earnings are just the most objective way to time things because it's on the calendar. You don't have to try to figure out, why something could explode at some reason for, who knows why. Um Yeah, I tend to trade around my long-term position too. Macro keeps me in the game. I traded with him in the pits in Chicago in the '80s. Cool. Yeah, it's awesome. Yeah, also one time on CNBC, like the producer called me and this was like before I had built up a big stock account and I was an options trader, which was primarily why they're having me on. And like they have at the end, they have this disclosure thing where you have to say what stocks you own. And because I'm always because at that time I was always in and out of options trades, right? And so they used to call me about different things. They'd be like, "Oh, this is up today. Can you talk about this?" And it was at the when I first started doing TV, it was never my choice what I talked about. So it could be completely random names that I would never buy, wouldn't be interested in trading. They would call me and be like, "Hey, can you please talk about why Pepsi's up today?" Or, whatever example. And so they have this disclosure thing at the end where it says if your firm has the position, if you have the position, if your family has the position, and, like, because they would always ask me about random things that I wasn't really interested in, and I also wasn't buying stocks at that time, and if I didn't have an active options position, my responses were always, "No, no, no," like, "Guest doesn't have this, guest doesn't have this, guest doesn't have this." And the producer called me one time and she was like, "Now, why aren't you in these names?" I was like, "What do you mean? Like, you're calling me, asking me about random things that are already up 20%. Like, if you wanna ask me about the positions I have, I'm happy to talk about those, but you're asking me about, you know, things that are not really very relevant to my trading strategy, basically." Um, so at that point, I was kinda like, I am gonna start building this long-term, portfolio, and that was, really when I started that, and then, I mean, I showed it, let's see, where's my slide deck from yesterday? I showed it last night, but I think that was really one of the main catalysts to kinda start doing that because I was like, "You know what? Yeah, I should be building a long-term stock portfolio using my own strategy." Um, 'Cause it just wasn't really I had read all about different, um I had read all about different investing strategies and as a trader and as somebody that's just not I'm not very risk averse. I do try to be, like, more conservative, um, but there just weren't really very many investment strategies that really appealed to me because I'm an options trader. So, anyways, then I started building this long-term stock portfolio with this strategy, this five-star strategy, and I've just been crushing it with this. So, I'm just gonna keep doing that also. Joe and Mark Ritchie, I have not. Awesome. Well, I think that I answered all the questions. If you have any other questions, definitely let me know. The class is tomorrow, so if you wanna sign up, I would recommend doing that now. It is gonna be recorded. I learned from and hung out with Tom. In fact, he gave my son a job as his right-hand man way back when. Oh, cool. See you guys tomorrow. Excellent. I'm looking forward to it. Yeah, I mean, I worked really hard on the tools. Daryl worked really hard on the tools. I personally find them really helpful. I think that they are pretty flexible also. I think you can use it for just a lot of different purposes. Should I take the plunge? I mean, I would just ask yourself if you have, you know, if you're interested in finding more confluence for your trades. The reason why I like it is because it gives me objective facts that I can use and it has, I don't want to call it a back tester because it's not a back tester, but by looking at the grid for each individual stock, you know, you can see, okay, does Amazon rally into earnings? No, it does not. Could it this quarter? Maybe it would this quarter just because last quarter it had a big move and a big rally, but it does not have a consistent move going into earnings. Like it just doesn't. I mean, it's not a back tester, but you can go back to every single quarter and see how the stock itself behaves. And then based off of the ranks, you can see which ones are more likely um you can see which ones are more likely to work based off of the past moves. I signed up after you said that you're adding a column with a number of stars. Awesome. Great. Well, we're looking forward to seeing you there. I am looking forward to it for sure. But I have to finish working on my newsletter. I'm sending out the five-star trader newsletter. I saw one more person. I saw one more person asking to get included um, in the newsletter. Oh, and then NBIS. So we had a problem with the five stars for some of the more recent IPOs because, and it's not a problem with the tool itself, it's a limitation of the data. So for some of these more recent IPOs, one of the criteria in the five-star ranking system is the comparison between the actual earnings numbers, the estimates, and the actual numbers in order to calculate growth. So the issue is that with some of these newer names, if there were not enough analyst estimates out there, it can't just capture the data that doesn't exist. So, and I worked with it on NBIS for so long, and I was like, there has to be a workaround for this. But with some of these newer numbers, like it just doesn't exist. So if that is the case, it has a question mark. So you can see that the number 2 line, you need enough quarters for comparison in order for it to do the full calculation. So the reason why it has a question mark is because the data that it needs to do that calculation does not exist because it's a more recent IPO. It just doesn't have it. So because that star is not, it's not that it's not passing that star. If it wasn't passing that star, it would have a dash. But if it has a question mark right here, it's because it doesn't have the data. Danielle, you've always been very, very thorough in your classes and explanation of trade strategies. I always appreciated that in you. Took your Phoenix and earnings classes 3-4 years ago. Awesome. Well, it's always good to see you around. And Jack, I'll see if I can get you on the 5-star trader. Are you swing trading in the long-term portfolio? No, just buy and hold. This one right here, this is my Thinkorswim account. This is the one that I swing trade in. And that's the one that I'm going to be using for the class. The buy and hold is just, just buy it, hold it. Sometimes I sell, like Disney turned terrible. I got out of that. Trying to decide if it's for me. So if you're trying to decide if it's for you, it may help to check out my newsletter, and it may also help to check out the webinar replay from last night because that's where I walk through everything step by step. So if you have some time on your hands, just check out the webinar replay or feel free to email me, Danielle@simplertrading.com. It might seem like it's long because it was like 2 hours, but it was really the first 45 minutes that was the actual webinar. And then I just got so many questions that it lasted another hour. But you can definitely feel free to email me at Danielle@simplertrading.com. And then, with the class, you get the exact tool set. So because this is a tool-based class, a lot of my classes are not tool-based, and I'm going through primarily the options strategy. But with um, this one in particular is really focused on not just the strategy, but also like the tool. So you do get the tool that comes with the class. And then, yeah, looking forward to seeing you there, Bruce. Where do you sign up for the newsletter? If you want to sign up for my newsletter, just tell me you want to sign up right now and I'll just add you to the list, or you can go to the actual newsletter itself and sign yourself up. So here is the newsletter. Yep. Sign up for my free newsletter. And then I generally send it on Wednesdays and Fridays. Right now, I'm still sitting here and talking to all of you, so I haven't been able to write the newsletter yet. But right when I log off, I am going to be writing the newsletter. So it will go out after I'm done writing it, which will be maybe in like 2 hours. Okay, I'm copying the emails for the people that want to be added to the newsletter because as the admin, I can see your email. Yep. All right. Well, I'm gonna head out of here, but I'm looking forward to seeing all of you tomorrow. Or if you're not in the class, then I'll see you next week. Cool. Well, thank you. I'll see you next time. Bye.